All right, what a week. Some of the biggest companies on the planet just opened up their books, and we've been digging through all of it to find out what's really going on. So we've got this flood of financial reports, right? Revenue numbers, profit forecasts. It's a ton of data. But if you look closely, hidden inside all those numbers are some really powerful clues about where the economy is actually heading.
So what's the real story here, beyond the big headlines? We've sifted through everything to pull out the 3 key narratives that we think are going to define the economy as we look toward 2026. Okay, first up, and this one is impossible to ignore, is the absolutely massive amount of money being poured into artificial intelligence. Seriously, we're talking about a spending spree of historic proportions.
Just look at Meta. They're planning to spend up to a mind-boggling $135 billion in 2026. And that's on what's called CapEx, basically all the physical stuff like servers and data centers they need to build out their AI labs. It's a huge jump from last year.
And they are definitely not alone. Microsoft dropped $37.5 billion on CapEx in a single quarter. That's a 66% jump from the same time last year. They are just aggressively building out data centers to power things like Azure and OpenAI.
And check this out. It's not just the pure software companies. Tesla is more than doubling its capital spending to over $20 billion this year. And why? Well, it's to fuel their huge ambitions in AI, self-driving, and, of course, the Optimus robot. The amount of money flying around here is just astronomical.
Now, this is where it gets really interesting, because you can see the ripple effect. When a company like Meta spends billions on new data centers, a supplier like Corning, who makes the optical fiber, sees its revenue pop 24%. When Microsoft builds out its cloud, a storage company like Western Digital sees its cloud revenue soar 28%. And here's the connection you might not think of. All those data centers need a ton of power, which is why a company like Caterpillar is seeing a 23% boom in its energy business. It's a whole ecosystem.
And if you need any more proof that this demand is real, just listen to this from Western Digital's management. They're basically sold out for the entire year. This isn't some future prediction. The AI gold rush is happening right now, and it's completely redrawing the map for the tech supply chain.
So, with all this corporate money being spent on the future, it raises a huge question about the present. How is the average person spending their money? And that brings us to our second big theme, where we're seeing 2 completely different stories play out.
This chart just lays out the split perfectly. On one side, you have what we're calling premium power. Apple had record iPhone sales. American Express saw luxury spending jump 15%, mostly from its youngest customers. But then, on the other side, you've got everyday caution. A company like Procter & Gamble, the people who make Tide and Pampers, actually sold fewer items. And companies like McCormick and Starbucks are warning that things look a little tough ahead.
Let's look at that premium side for a second. Apple had its best holiday quarter ever, almost $144 billion in revenue. The demand for the new iPhone 17 was just staggering, making up nearly 60% of their total sales. And get this, revenue from China surged an incredible 38%, which pretty much quiets any concerns about competition over there. It's clear the high-end consumer is still very much in the game.
Now let's contrast that with Procter & Gamble. Sure, their beauty and healthcare segments did okay, but look at that bar for baby, feminine, and family care. It's down 4%. And here's the really telling part. Their overall sales were flat, but that's only because they raised prices by 1%, which hid the fact that the volume of stuff they sold actually dropped by 1%. So people are being really selective about everyday goods.
And that caution we're seeing on everyday items, well, it's having an even bigger impact on major purchases. Our third and final story this week comes from the auto industry, which seems to be at a huge crossroads, especially with electric vehicles. I mean, just look at this number from General Motors, $7.6 billion. That's how much they had to write down in EV-related costs in just 6 months. This is a huge pivot away from their old all-in strategy on electric cars.
So what happened? Why the sudden U-turn? Well, it was kind of a perfect storm. A big federal tax credit got eliminated, and almost overnight, their EV sales dropped 43% in one quarter. You combine that with a general slowdown in demand, and GM had to make a really tough call. They slashed their 2026 production target from 1 million EVs all the way down to just 300,000.
And this has set up 2 totally different game plans for 2026. GM is pivoting back to what makes money now, profitable gas and hybrid trucks. Their goal is to cut their EV losses. Tesla, on the other hand, is flooring it into the future. They're shifting focus from just selling cars to what they're calling physical AI, things like a self-driving cybercab and the Optimus robot. It's a classic case of playing defense versus playing offense.
So after that whirlwind tour of earnings week, what does it all mean? What are the big takeaways? We've boiled it down to 3 really clear trends.
First, the AI gold rush is real, it's massive, and it's creating a boom for all the companies that actually build the digital world. Second, we have a 2-track consumer. The market is totally split between strength at the very high end and a lot more caution everywhere else. And third, we're seeing an EV reality check. The road to an all-electric future is turning out to have a few more bumps and detours than we thought.
And all this leaves us with one final and honestly pretty crucial question. The consumer story and the EV transition are both important, no doubt, but the sheer scale of the money being poured into artificial intelligence is just on another planet. So looking ahead, you have to wonder, is the AI revolution going to be the only story that truly matters for our economy?